It's Friday. It's Banter Day. You got Bitcoin trading at $23,300. We had a little bit of a move in the Nasdaq. It's Banter Day. You got Bitcoin trading at $23,300. We had a little bit of a move. Something's there. We go. That's better. We did have a little bit of a move in the Nasdaq a few minutes ago. Let me show you that move. That's the move. You can see that big red candle. That's the Nasdaq coming down on the jobs report. But again, the market's shaking it off because this market's bullish. So if the market's bullish, well, let's talk about the bullish market. Let's talk about what narratives are going to be running. We've got some great guests for you here today. It's Friday. It's Banter Day. Let's do this. Can I play the song, Carl? Yes. Wakey, wakey, rise and shine. It's a green day on the markets, especially for those people who got in on the NEAR protocol call yesterday. Did you guys actually trade NEAR protocol like we told you yesterday? Look at that, up 15.72%. I think it's going to carry on running until the conference, which happens sometime in September. When is that conference? I do have it here. Let's take a look. It's the 11th, the 14th of September. We're going to be covering that conference. We're going to be there. We're going to be covering that conference. We told you guys that I think in the run-up to the conference it's going to be going. So those of you who actually got in, well done, well done, well done, well done, well done, well done. Let's get some better music going. Welcome back, guys. It's Friday. It's Banter Day. I'm Cryptoman Ran. If you're new to the channel, you know what you need to do. Subscribe to the channel. Give us love. We managed to get the subscription rate up a lot. So we had something like 50% subscribed and 50% unsubscribed. More recently, 85% of you are actually subscribed. So give yourselves a big pat on the back. So amazing. Remember, it's Friday. Friday Banters are brought to you by our partners. Our partners are NordVPN, and these people are helping people protect their crypto everywhere. For $3 a month or less than $3 a month, you can mask your IP address. You can trade completely anonymously. You don't have to reveal to the exchanges which country you're in. You can just use a VPN and you can mask that. And if you do take out a NordVPN, you also get a Nord password manager. So I think that NordVPN is really the number one VPN for crypto traders. So if you're not already using a VPN, just go to the referral link below. Hit grab the deal. You'll land up paying, let's quickly get the numbers. I think it's $3.16 a month, including 1 month free and a 30-day. You can return it within 30 days if you're unhappy. So that's NordVPN. That's love to our sponsors. Anyway, let's get the show on the road. What we had today, we had the job numbers. The job numbers were, well, you can say better than expected, but then it's also worse than expected, depending on how you look at it. So we had very, very, very strong job numbers. That's a good thing. It means that people are actually employed. But it's quite a weird recession because it's a recession where everyone's getting more jobs. It's not really a recession, I guess you can say that. What the market's first reaction was when that happened was we saw the Nasdaq going down. The Nasdaq went down, and for the first time in a whole lot of days, the Nasdaq actually started to come down. It went down about 1.64%, but it's kind of clawing back all those losses. So I guess the markets are brushing off this news, and they're kind of saying that the Fed will stay on its path, and we'll probably get a 75% basis point, 0.75% rate hike in September. So that's what happened. You've got Bitcoin at 23,000, holding above the trend line. You've got Ethereum, which bounced off the trend line over here. As you can see, bounced off the trend line over here. You've then got the government, the 10-year treasury yield. Now, that's one that broke below the head and shoulders, now broke above. So we've got to keep our eyes on that one. And then you've got a whole lot of alts that are exploding. And today we're going to speak about those alts that are exploding. We've got an amazing panel for you. Although I see that one of the panelists is not here yet. I'm sure he will join us. That's Haseeb. But I do have Avichal back here. I was hoping Haseeb would be here before you, so we could, you guys could argue about everything again. You promised me last time you'd argue about everything, and you landed up arguing at the very end, which was like, what are you guys doing?
How else am I going to get back on the show? We got to tease you for the next time. I just texted him. He's reading the text now, at least, so we got progress. So
okay, we got progress. All right, he'll join us. And then I've got Ryan Selkis from Masai. Ryan, welcome, my friend.
How you doing?
So good to have you back on Banter. We haven't had you back. I think the last time we had you, you did your 2022 trends report.
Yeah, nothing's changed ever since.
Nothing's changed ever since, except you've been working hard. I've seen you working super hard. We've got to get, so we've made our guests a commitment that this is going to be the highest alpha show on the planet. We made that commitment to everybody watching. And we also told them we're not going to spend a lot of time talking about macro because our audience are degens. They couldn't care less about macro. We try and teach them a little bit about macro, but they're not interested. They want to know what's going on. So I think I'm going to kick off with the topic of Ethereum and the ETH Merge, which is coming up sometime in September. And now all this talk of potentially a hard fork happening on ETH and maybe two chains. So the chain splitting into two, a proof of work chain and a proof of stake. Haseeb is here. Haseeb, welcome.
Sorry, guys. Made it a little bit late.
Just in time to start talking about the ETH merge and whether or not we're going to get a proof of work chain and a proof of stake chain, whether this is a whole lot of hot air. What I am seeing is this. So I've been looking at the price of stETH. And to me, the price of stETH is a very interesting price to watch because the tokens that are staked on Lido and that receive the stETH in return don't get or don't qualify for the fork if a fork happens. Yesterday, the premium or the discount on stETH was 2.5%. Today, it's 3.5%. Tells me that the market's pricing in that there may be two chains when the merge happens. What do you guys think of it? Could we be in a world where there is an ETH proof of work chain and an ETH proof of stake chain?
So first of all, okay, hold on. I'm trying to follow the logic here because that's a fascinating argument. I don't think that's exactly right, but you're clearly correct that stETH is connected to the price or connected to the likelihood of the merge going through successfully and the likelihood of a proof of work chain emerging. But a lot of the problem is that when the merge happens, right, that doesn't mean that stETH is immediately going to be redeemable because stETH becoming redeemable and being able to come out back into Ether is going to be the next hard fork after the merge. So the other confounding variable is a lot of people, in order to close the gap between stETH and ETH, you have to be willing to hold your Ether for like 6 to 8 to maybe 9 months until that hard fork after the merge. And so now you're absolutely right that obviously on the proof of work side, stETH is going to be worthless because there's no staking, so nothing is going to come out on the ETH POW side. I actually got dinner last night with Kevin Joe, who's Galois Capital, who's the guy who's stirring up all the shit on Twitter about, is the merge really going to happen? What's going on with all these taboos on Ethereum? And we were chatting about this last night, and his prediction. So just a quick way of background. So Galois Capital, they're one of the guys who were like one of the naysayers about Terra and got into a big shitstorm because he was fighting the crowd on Terra. It turned out to be right. Terra collapsed. And now he's fighting the crowd about ETH2, ETH1 versus ETH2. And this idea that ETH1 is going to continue to exist. Now there's this guy, this miner named Chandler Guo.
Chandler guy, yeah.
Yeah, so he has declared that he is going to create, I don't know if create is really the word, but he's going to support the fork of ETH1, the original proof of work chain he's going to call it ETH POW, and it's going to keep being proof of work. Now, he's a big miner, right? So it really makes total economic sense. If you're a big miner, you have a bunch of GPUs, and you know those GPUs are cratering in price. They're actively they're actively dumping GPUs because people know the value of those GPUs is going to go way down when Ethereum mining ends. And so what he's doing is it's kind of obvious. He's throwing a Hail Mary because if it works, and we've seen all sorts of crazy shit work in crypto. We've seen BSV worked for a while at least. Obviously BCH is still a pretty big thing. If he can single-handedly make this a real chain and make this valuable, then great. The GPUs now suddenly are a lot more valuable than they were before. And so that's I think what's motivating this. And you see a lot of support for ETH POW is in China, where a lot of the people in China, they love proof of work because there's a lot of mining in China. So it's almost like the way I analogize it is that people in the US, they think of exchanges as being really important. They think of exchanges being a really important part of like the overall ecosystem, right? Like Coinbase has a big voice in the US, and it's a big part of if there were some kind of change to Ethereum that was really bad for exchanges are they're not clearly like the community. They're not clearly like a part of the crypto constituencies, but we still care about exchanges. We feel like it'd be kind of mean to go out and do something that's bad for exchanges, right? That's how China thinks about miners. Because miners, like, they're the big guys. They have a big voice in the community. They made a lot of money early. They support a lot of things in the community. And so, yes, they're not technically a part of the blockchain. But if you do something that's bad for miners, like that's kind of mean. Like, why are you doing that?
So what do you think is going to happen? I mean, what do you think is going to happen? Are we going to get a dual chain? I mean, is this something that is going to happen? We're about a month away from the merge. I mean, give or take.
Yeah.
No,
the answer is clearly yes. I mean, well, sorry. Before I'll say my answer, then you can go on. I think the answer is clearly yes. The question is simply, how valuable is that other chain going to be? Is it going to be worth 1% of ETH? Is it going to be worth 10 basis points? Is it going to be worth 5%? I think 5% is probably the ceiling. Kevin thinks it's like 3 to 4%, and so I think the right way to answer the question, because clearly the fork is going to happen. Like there's no question about that. The question is, how valuable do you think it will be? And maybe Avichal, Ryan, I'd be curious what you guys think. How much value relative to ETH do you think this fork is going to have?
Well, the market's telling you that the value is about 3.5%. That's what the market's telling you.
You know what's funny is like you can look at ETH Classic as a kind of a proxy, and ETH Classic right now is worth like 5, and ETH is worth just north of 200. So ETC is worth 2-ish%, 2 to 2.5%. And so if you think this is a more viable competitor to ETH in some sense, right? ETH Classic, I mean, when did ETC fork, right? And does anybody really maintain that thing from a code perspective? It's not crazy to think that it should be worth more than ETC, right? And so 2 or 2.5% is like a floor to say, okay, that's actually not crazy. That would roughly put me in the same like ballpark at about 3.5 or 4%. I'm actually with Kevin on this one. I think it might actually happen. I mean, there's all sorts of downstream challenges, right? Things like, how does USDC work on this thing? Because the tokens just won't actually be backed by anything. Like Circle and Coinbase are not going to value that version of USDC, so you can't actually get USDC out. And USDC underpins all of DeFi. So like, what happens on that chain? There's just like a mad rush for everybody to get out of that USDC and unwind those positions. And then there's a question of like how the bridges are going to work, and like, can you bridge your assets out? And like, is there a mad dash for the exits? And like, there's like a bunch of second order effect questions here beyond just like, can the miners get the chain up and running? But almost certainly the chain is going to be up and running. And I mean, then there's a question of like, which exchanges support it? Like, how do you actually get liquidity on this thing?
I want to say for the record that on the first question, you guys agreed again. So
I was hoping he would disagree. I was hoping he would be all about the like, there's no way this works. It's just weird. Such weird things happen in crypto. This is totally viable. I think it's actually very, very viable that this happens. I don't think it's durable. Just to be clear, I don't think anybody's actually going to use this thing. It's not like a real competitor. It's not going to have its own ecosystem, all that kind of stuff. But yeah,
I want to talk about that. But Brian, I want to hear your view first. You're saying we're not a month away from the merge. I mean, the date that they quoted was somewhere between September 12th and September 19th. That's what they're saying. Mm-hmm. In fact, I go to when merge. Again, this is my source. They're saying that the merge is 37 days away. That's what when merge is telling me. What are your thoughts here?
There's a cardinal rule with Ethereum: always take the over. So I would say 70% chance that the merge happens this year, and maybe 5% chance that it happens before Q4.
Okay.
And I think we haven't seen the last of the FUD around what happens with all these DeFi applications during a fork, and I think there are I think there are legitimate concerns around black swan issues and the potential for disruption. And we saw in 2017 how that narrative can really spiral and take on a life of its own if you just look at what happened with the fork of Bitcoin Cash. And at one point it got up to 30%, 40% of Bitcoin in terms of market cap. It was short-lived, and now it's basically an afterthought, and it's had its own issues. But I would expect that you'd see some similar disruption leading into the merge, if for no other reason than people want to make a trade and play the volatility around the event, regardless of the long-term fundamentals. But because there's going to be those trading dynamics going into the merge, I would guess that might cause not a significant delay, but some delay, just so that the core developers feel safe and feel like they're not going to cause undue risks for all the other killer applications that are sitting on top of the protocol.
Yeah, I mean, I hear you, and I guess the other thing that probably needs to be addressed is this difficulty bomb. So there is the difficulty bomb, which makes Ethereum harder and harder and harder to mine, and is designed as an incentive to move everyone to the proof of stake chain. And they'd have to fork that and basically fork the code and create a version of the code without the difficulty bombs. I think that's that. But you mentioned something. You mentioned BCH and Bitcoin, and you mentioned the ratios of what Bitcoin was trading to BCH. You also mentioned that there may be a trade here, and I think I agree with you that there may be a trade here, just like there was a trade when BCH forked from Bitcoin. I don't remember the exact ratio, but I think the number is around 30%, where BCH traded about 30% of Bitcoin's value that one weekend in 20 back then. So we could get a situation like that.
I think so. And Haseeb, thank you for sharing the poly market prediction on when the merge will actually take place, because I think this is the easiest money I'm going to make all year. Betting on this to drip into October.
Put your money where your mouth is, sir. Yeah.
So three to one odds. I'll take that. It's 74% for.
Here are the odds. Here's what Haseeb shared, just so that you guys can see. You've got by September 1st, 2022, yes. So that's a non-event. By October 1st, 74% say yes by October 1st. Ryan, is that a bet you'd be taking?
I'll take the other side of it, yeah.
Okay, by November.
You got to think of the market on poly market.
No.
It's a lot of Ethereum holders and believers and people that are probably. I would say that the correlation between people that are betting yes and that hold staked ETH and are staking ETH and have been kind of pretty deep in the community for a while is probably pretty high. So I'll take that as like a home team bias right there and take the other side of it. I think that's mispriced.
Okay, are you playing that market?
No, I'm not. I mean, it's also extremely illiquid. Like I'm not seriously arguing this is the best estimate, but it is better.
Oh yeah, this is not a fund manager trade here. We're talking about $500,000 in volume. I might just put a couple of shekels in there just to be able to point to the trade.
He got this from a friend. Let's just say he got this from a friend. Listen, if you're watching, specifically if you're watching, give us a comment, and if you're watching after the show, let us know in the comments. Let us know when you think the ETH merge is going to happen. Let us know when you think the ETH merge is going to happen. That would be amazing. Is there a market for a proof of work smart contract blockchain? I have heard people talking about proof of stake is not as secure, and we can have the discussions, and Vitalik will argue till he's blue in the face that it is. But some people are saying that there is a market for a proof of work smart contract blockchain, which needs higher security. And I don't want to get into debate of which one's better and which one's more secure, because then we'll be here for 12 hours and we don't have the time. But is there a market for a proof of work smart contract blockchain, and maybe with lower transactions and lower throughput, and a different market for a proof of stake blockchain?
I would say maybe. I think you need either a proof of work secured smart contract blockchain, or you need a private by default smart contract blockchain. I think this concept that we are only going to have pseudonymous, relatively public blockchains that are proof of stake is unlikely to be true at scale. Like, you're always going to have some need to preserve privacy, and I'm not sure that all gets kicked down to the roll-up layer or the L2 layer. To me, there's a lot of tail risk when it comes to capture of the principals and some of the material holders in a proof of stake network. So I think that's going to be valuable, even if it's not the dominant chain, and even if nobody really uses it, quite frankly. I think there's going to be value in having that as a safety valve, right? And it almost like helps the proof of stake chain that sits alongside of it become more secure over time, because you do know that if there were any malicious activity on chain, or you had the potential for regulatory capture, or different jurisdictions were making hostile rules and really putting pressure on major centralized actors in the proof of stake system, you'd always have the opportunity to migrate liquidity and migrate applications to a parallel chain that's secured by proof of work.
So then there could be a good market for this fork that is about to happen. Ethereum Classic. So we had some of the miners giving them some money because they wanted to all of a sudden save their GPUs. I mean, and Ethereum Classic has had a killer pump. I mean, I could call up the price while we're talking about this. Is there any value in Ethereum Classic, or is this just a merge pump and dump play?
I mean, it all seems incredibly cynical to me. The reality is that from the perspective of users, as a user, why would you care if this is a proof of work or proof of stake chain, right? What you want to do is you want to interact with the blockchain. You want to buy an NFT. You want to use you want to use a dApp. You want to use DeFi. You want to use some USDC, right? Like real users want to do things. They don't care about some ideological battle between proof of work and proof of stake, right? They want a blockchain that works, that is cheap, that is fast, and that has stuff on it. So in some sense,
I think I heard you say Solana. Sorry, I think I may have heard you.
Well, look, Solana has very different kinds of things going on top of it than Ethereum does. Now, clearly, users aren't the only group that matter. I don't want to imply that, right? Like clearly, miners also do matter to some degree. Validators do. They're what give security to the chain. Developers matter, and kind of the true believers also matter. Like they do affect the overall pastiche of what a blockchain is. But it's pretty clear. I mean, look, Ethereum from the very beginning, like in the Ethereum white paper, they say we are eventually going to transition to proof of stake, right? It was there from the very beginning. This was Vitalik was writing blog posts about this in 2014, saying that by 2017 he expected Ethereum to be fully off of proof of work. Now, of course, it took a good 7 years later than he expected it to, a good 5 years later than he expected it to. But this was always in the cards. And so now it feels like this Hail Mary about proof of work smart contract platforms. Like it's pretty clear to me that what's going to happen when this fork takes place is that it's going to be a ghost town. There's going to be some funding from miners, like kind of the way that people really tried to make BSV a thing, and they thought, look, if we just throw enough money at it, we can kind of make people care. It didn't work. Like, do people care about BSV? I mean, it had a moment. People were talking about it and trading it, and it was worth something mechanically on an exchange. But in the long run, like if you can't actually get users and use cases, no, do we need another just like empty blockchain that's like EVM compatible? Like, no, not really.
It's like being on life support with no brain function.
Yes.
That's kind of like what the surviving chain is going to be. So, I guess technically you're still alive, but it's just a matter of when the traders pull the plug.
Okay, so here's my predicament. I'm holding stETH, and I'm getting a little bit of FOMO because I'm scared that if I hold the stETH, I'm not going to get the tokens I'm not going to get the old the Ethereum tokens in the new proof of work chain, because you don't get them on your stETH. So would you now, at a 3.5% discount, would you trade your stETH back for ETH, lose the 3.5%, and then get the token in the new chain?
Well, hold on. I don't think that's the correct way to think about it, because stETH was trading at a discount before all the merge talks started, right?
Yes.
If you remember, that was like one of the trades that blew out Three Arrows Capital was the stETH leverage trade. So because it was already trading at a discount, it's a little bit complicated to be able to look at that and say, okay, well, that is the price of the missing, ETH1.
Yes.
If you look at the futures prices, right? Basically, so Kevin from Kevin Joe from Galois, he was the one who basically originally said, you guys are not sufficiently pricing in the value of ETH1. There is going to be a successful fork. And the way to trade that fork is to be long spot, short futures. Because if you're long spot and short futures, being long spot means that you get to collect the fork. And if you're short futures, you're hedging out the future ETH price, right? So basically that means that you're getting long the fork for free. And if you look at the how much it costs to go long spot and short futures, so like what's the carrying cost of that trade? That is presumably what people think is going to be the value of the new network. And his claim, I spoke to him last night, his claim is that like he thinks that still that trade seems to be underpriced. Right now, I believe it's something like, if you take that idea seriously, the network is being priced at something like 0.5%, because that's the carrying cost, is 0.5%.
Yeah, that sounds like a good trade. Sounds like a good trade.
I mean, it's or maybe the market is correctly realizing that this is like a very sharky fork and that people aren't going to take it seriously. And it's going to be turbo dumped the moment that people collect their ETH.
So what are you guys, I mean, as much as you can disclose in your funds, I know both of you run funds, what are you guys doing in your funds? Are you hedging the merge? Are you long into the merge? What I mean, for as much as you can disclose whatever's public information, how are you positioning yourselves for this merge?
Yeah, we're pretty easy. We don't short. We don't really do much derivative stuff. We're a VC firm, so we find stuff that we think is going to work over the next 5 to 10 years and hold on and try to help. So we're pretty simple, and we love ETH. We have a massive, ETH position. It's one of our largest positions, if not the largest at this point.
Okay,
Yeah.
I mean, good point.
Pretty simple.
Haseeb, how are you guys playing this?
I mean, I again, we do the like 100 IQ thing. Like, look, you just hold Ether.
Yeah.
And when you got the fork, you just sell the fork. I mean, it's not that complicated.
Okay, that's a good trade. Ryan, I mean, are you still an ETH bull? Are you long ETH? I know that was one of your big longs.
Yeah, Bitcoin and ETH and cash hasn't changed. I think if you're going to be in the market right now, you want those two, and then basically on the sideline with everything else, with the exception of kind of angel and early venture portfolio.
Okay.
The other thing I'll say, because you mentioned earlier about how Bitcoin Cash and ETC used to be a very large portion of the market cap of the fork E or whatever, the original fork. It seems to be the case pretty much always is that at the moment of the fork is like when the price is highest and there's the most optimism, like, oh, maybe this thing will end up having a shot at the king. Yep. And almost always what happens is that the fork then just pancakes in price and it becomes like a tiny fraction of the original, which implies, not investment advice, that the best thing to do is to try to get to the exit as fast as possible.
Well, and this is the thing too, right? These numbers are kind of fake. Like when you look at any price tracker, it's like there's no real liquidity at that moment that the fork happens. So it's not like it's actually worth that, right? It's not like you can actually get that kind of liquidity on the way out, right? So
that's true, but it does go down further, over time.
I agree with that. It's just, but a lot of these prices are just kind of fake, right? Because you're taking like something that doesn't really have that much liquidity in some price point times the number of tokens, and so also it's like kind of fake valuation, fake. It's like kind of fake money in that sense, and so you can't actually get your money out is the thing until it pancakes. Because by the time it pancaked is when you actually got liquidity. So.
Yeah, I agree with you. All right, let's leave the ETH merge to the viewers, to the guys who are watching the show later. Let us know in the comments when you think the merge will happen. Let us know what you think of the value of the new ETH chain will be if you think the merge will happen. So I think let's leave it at that. I've got so much to talk to you guys about, but I want to talk to you guys about this next. Sam Bankman-Fried, I think you guys have probably all seen this. If you haven't seen this, he was asked what the most underrated token is right now. If you haven't seen it, well, I think you could probably guess what he said.
Token right now.
Most underrated token right now. Okay, I'm going to give a non-investment advice, blah, blah, blah. At least as of a month ago, I think the answer in some sense was Solana, not trying, but basically just because I think it had like a lot of bad PR over a short period of time. I think it sort of deserved that, to be clear. Like it went, like technologically, it had a lot of shit to work through. But I think it has sort of already worked through like 2/3 of that. I think it will get through the other third. And I think that like the thing that people were missing about it was that anytime you test the limits of what's possible, that's when you figure out what breaks. Any blockchain would have broken if it tried to do what Solana had done.
So he said that Solana was his most underrated token. I want to know if you guys agree with him, or what do you think the most underrated market listed token is at the moment? So today we're degening. Today we're not playing niceties and macro. We're going straight. We're digging in today. And yeah, I think Avichal, I think I'm going to start with you actually.
Yeah, well, so not investment advice, obviously.
None of this
signal. The thing I always come back to is I think I was sharing this in the chat around ETC as well. It's just like if you go to their GitHub, it's dead. Nobody's actually writing code. Nobody's updating the chain, and like you can't have a thing of value if there's no utility there. To Haseeb's earlier point, and in my opinion, the best. It's just, I mean, you look at that and it's been dead for years. And those big spikes that you see, by and large, when you start poking around, they're website updates. So yeah, like somebody's like updating the website to say like, hey, we're still alive, but like nothing is actually happening. And you can't have utility if the developers aren't creating protocols and patching changes and fixing bugs, and at the very least, right? So the thing we always look at is the developers as the leading indicator. Like, where are the developers? Where are they spending time? Where is their innovation and new utility? And Solana certainly has a real ecosystem. I mean, if you look at it historically, it's one of the fastest growing ecosystems. It started from a small base, but it's, if you look at the Electric Developer Report from about 6 months ago, Solana and Near are the only things that have actually kept pace with early Ethereum. is sort of at that on the same growth curve. If you sort of zero index it, you say one was the first check-in on the ETH code base, one was the first check-in on the Solana code base that was public, the first check-in on the Near code base. And actually, I think Avalanche was doing well, Terra was doing well, BNB and Polkadot were also doing well, but those have really sort of fallen off in recent times. And so it looks like Solana, ETH, and maybe Avalanche are sort of trending on the same curve that ETH was in the really early days, and has persisted. Like those are real developers. When you go look at the code, they're building real stuff. These are the only ecosystems that when you look at it, they're able to actually command venture capital. Like, high quality VCs are going in and saying, okay, this might actually work. I'll give you money to the developers, not to the L1 chain, like the people building on top of the L1 chain. Cosmos is the other one, but there's always been a sort of a question of, what actually captures value in the Cosmos ecosystem. Is it actually the Atom token or not? And there's a bunch of nuance there, but I think if I had to pick an ecosystem, setting aside value capture and setting aside tokens, I'm actually really optimistic about the Cosmos ecosystem. Like between Tendermint and that SDK, IBC, like it might actually be that the Cosmos guys were basically right. I mean, like Jay and Ethan and co were writing these white papers in 2014 about the right architecture for this network. And I think they were basically right. Like they basically called a lot of stuff that happened, it's basically happened over the next 10 years. And so, I mean, you look at things like DYDX is moving to its own app chain, but like if you start probing into where the code is actually being used, like I've been actually blown away by the strength of the Cosmos ecosystem.
Okay, and I think I agree with you, but how? I mean, I know, and you mentioned the value capture there. What is the way to value capture there? I mean, the Atom token is not the way to capture value in the Cosmos ecosystem. I mean, what do you buy things like Juno and all those things, Osmo, DYDX? Do you actually buy the underlyings? I'm not sure that that's the smartest way to get the value in that. How would you capture the value?
Yeah, I think it's a little bit TBD, and I think it's a little bit. I think it's probably more likely to be at the app layer where you actually have things that are being used by end users. I think there's this whole. It's something I've been meaning to write about, but I think there's this. There's this fat protocol thesis, which I disagree with because I think it's incomplete, where people say like the only thing that's really going to capture value is the L1. This is an old paper, I think, from USV, Union Square Ventures out of New York, maybe 6 or 7 years ago, something like that, like 2016-ish. 2017, yeah. Yeah. And so, and I think it's partially correct, but I tend to think of it more like a U curve, which is if the x-axis is how close to the user are you on one end, and on the other end is basically how close to the bare metal are you, like solving real technology, hard technology problems, and the y-axis is how much value do you capture. I think you get kind of like a U curve. So on one end of it is the layer one, which captures a ton of value, because building a real layer one that has settlement, that has data availability, and is a potentially non-sovereign money, that's tremendously difficult, like technically, to pull off and build an ecosystem. And I mean, trying to recreate ETH or Bitcoin at this point, think about the billions of dollars it would take from a CapEx perspective. But I think the part that most people don't appreciate is that the other end of the U curve, if you own the end user and you own that relationship, and you're the first thing they think of when they open up their browser or their phone, that is also tremendously valuable. And you kind of see folks like Uniswap realizing this. Like Uniswap is kind of in the middle. They're not really Ethereum layer one. They have this amazing protocol that everybody uses, but it's really hard to capture value there. And so what you see Uniswap slowly doing is moving up the other side of that U curve to the end user. And so in the Cosmos ecosystem, it's entirely possible that actually like the value capture is end user applications that lots and lots of people want to use that happen to be built on top of the Cosmos SDK.
Okay, Ryan, what do you think? If I were to ask you, what's your most undervalued or your best performing token, or in the next 5 years, what's it going to be?
So I think we just heard the 130 IQ approach here. So I'll follow up with the 70. The U curve, I think.
142 IQ. 142
yeah,
IQ.
I mean, the U curve, the barbell. I think that's a really smart framing, and I think it captures some of the challenges that Cosmos in particular has had. The question is, are they going to be able to move up to the, they're probably not going to move to the users. Probably going to have to go the other way around. Is there a way to capture that value on the first side of the U? One way to look at the non ETH L1s and kind of where they're positioned is SBF mentioned Solana. I would maybe think about it slightly differently in the sense that if you wanted to add Near, Solana, Cosmos, and Polkadot together, for instance, and I'm leaving Avalanche out intentionally because there's EVM compatibility there. But basically, if you think about like and Near I know has some, but like just non-EVM compatible chains versus EVM compatible blockchains, it's almost like iOS versus Android. you're probably not going to have like 5 or 6 or 7 different like crypto operating systems, but you'll probably have 2 dominant ones, right? And I think the EVM is pretty firmly entrenched. So who's going to emerge is the second. And if you look at the combined market cap for all of those other non-EVM layer ones, it's just north of 10%, maybe 15% of ETH right now. So if you wanted to think about like the basket of those versus ETH in this like iOS versus Android comparison, like one of those other platforms will likely win, or maybe it'll be something new like Aptos or Sui or some of the other kind of newer chains, or we'll see something entirely that hasn't even been built yet. But I think it's early to make that judgment call. The way that I would kind of play that 70 IQ is just to take the bundle and say, do we think that Ethereum is going to conquer the world? Maybe, but there's probably going to be a strong counterbalance to it.
Okay, and you'd put your money into a basket of the other ones and just hope that one of them emerges as the winner.
Yes. I'm not even going to say not investment advice, because that's like the GDPR pollution of finance.
Yeah, that's it's all good. Haseeb, what do you think?
Well, I am contractually obligated to disagree with Avichal, so I'm going to go ahead and I'm going to make sure I get that done. So I'd say that I'm relatively short app chains. I think, and this is going to be actually, Avichal, you were the 140, Ryan, you were the 70. I'll just take the 100, which is that empirically, if you just look at CoinMarketCap, app chains are just not big. Like they're just all small. All the big, really valuable things are all generalized L1s. And I don't really know why. You can kind of, everything in crypto, when we come up with these theories of like why this thing is worth more than this thing, it's always post hoc, right? We just kind of look at how things are priced and we say, oh, here's a story that kind of makes sense about why this is as valuable as it is. And that's kind of how I feel about the L1 versus app chain thing. Adam, previously the most valuable thing on top of the Cosmos ecosystem was Terra, which was a generalized L1. And it felt to me like, and obviously after the collapse of Terra, most everything else in the Atom ecosystem has gone down in value a lot. And then we just saw the Nomad hack, which took place earlier this week, which was one of the big bridges that connected to, I think it was Evmos and Moonbeam, which are, again, two of the big chains, two of the big sort of app chains, I'm sorry, not app chains, generalized L1s on top of these, like Cosmos and Polkadot, which are the two interoperability, launch your own blockchain networks, which again are also two of the biggest things happening on each of their respective networks, are the kind of generalized L1s. And so it feels to me, kind of looking at all this, that yes, app chains will be a thing, but will they be important and super valuable? It seems to me relatively unlikely, at least over the next 3 to 5 years. It seems like although app chains will exist, it is much better to build a platform than a single application. In the same way you'd rather be Facebook than be Zynga. And now, in the clip that you showed about SBF talking about Solana, I actually think he makes a very good point, which is that so Solana summer is over, right? Like last summer we had this idea that maybe Solana will just eat everything and become like the future of all computing or what, I don't know what people thought, but it was crazy, right? Solana had so much momentum, and it's clear a lot of that momentum has died off. Like DeFi and Solana has cratered. DeFi is just it's dead as a doornail on Solana.
Well, according to that article that came out today, I think it came out on CoinDesk. I'm trying to find the article, but a lot of that TVL was app built on app, which was this. Yeah,
it was the same guy basically.
The scheme built with Sunny and Saber and everything else that went in. I read the article actually this morning.
That's
funny.
Right.
I mean, funny story. The last thing you want to be getting is a tweet from Zach XBT, and I woke up in the morning. The first thing I see like Zach XBT. I was like, okay, he just asked me if I was invested in all of those, which of course we were.
Not investment advice.
Yeah.
Well,
so going back to.
But I think I disagree with Haseeb on this, because I think there's two ways to interpret that. I mean, obviously I think Solana ecosystem is very real, all the things he said, but even the DeFi data it's interesting. I mean, even if the headline numbers were off because of this sort of scheme that this guy was running, I think what matters more than the number is the growth trajectory, and I think there are these really interesting bright spots when you start poking in. So, for example, one of the I happened to be randomly looking at the data recently, but if you look at like Zeta markets, which is an options protocol, and we're investors in Zeta, which is why I was looking at the data. Their open interest on Sol options is as big as Deribit's now. So they're actually like, of the Sol options market, they're doing the same volume as like a centralized exchange, right? So I think if you start looking at like sort of like micro places inside the ecosystem, there are these like really interesting bright spots. Or you look at Solana NFTs, right? And they're doing like crazy volume, and I don't know.
NFTs for sure. NFTs are the most product market fit right now on Solana.
Solana did something like I don't remember the exact number, but I think Solana ETH did 31 million transactions last month, and Solana did like 1.something billion transactions. So from a transaction point, non-voting transactions, so real transactions. So from a transaction point of view, Solana, I mean, there is something happening on Solana, like it or not, there is something happening on Solana.
I 100% agree.
You're not asking my question. You're not asking my question.
Well, I was getting to that. You interrupted me. I was getting to that. I actually think people are sleeping on Solana right now. Because Solana's had this string of very high-profile failures, right? Like they had all the downtime they've had this year, and then they just had the Slope wallet get hacked, which caused like 8,000 people to lose their private keys. There's this article about Saber and how they were recycling TVL and doing all this nonsense. But it's very clear, like you said, that Solana transaction volume is growing. Actually, daily active addresses are growing. Now, DeFi is struggling net on Solana. I think largely just because of all the downtime. Like you can't do DeFi if you have downtime. Like it just doesn't work. The two things don't go together. But it does feel to me, it's like, okay, well, if you want more throughput than Ethereum, like today, if you really want like high performance computing, like where else are you going to go? Like when we saw, I mean, again, I think one of the biggest leading indicators is when people leave an L1, where do they go? So when people left Terra, and you saw this big, Terra diaspora, the number one place where they went was Solana.
I thought it was Polygon.
Polygon was up there. I think Solana and Polygon probably in that order were the two biggest places where people went to. Because of course, Solana's Rust, so the language is the same as what you'd have to write on Terra. But it feels to me like still, I think people are a little bit too quick to dismiss Solana. I think it's clearly still a force, and it's one of the only things when you look at on-chain metrics that is growing in the fundamentals. Like right now, most things are just kind of skipping sideways, and they're just kind of holding on. I mean, it's a bear market. There's not a lot of great narratives right now, other than the merge, which is more of an economic one than it is like here, do some stuff on Ethereum because the merge is happening. So I think the fact that Solana is growing in those metrics, and look, it's hard to tell from on-chain metrics how much of this is gamed, how much of this is people like creating multiple accounts to just mine STEPN or something. We don't really know for certain, but it's very clear stuff is happening on Solana. It is one of the most vibrant ecosystems, and so I think it'd be very unwise to sleep on it.
What about I'm looking at the price of NEAR up 17%. We know that NEAR's I think it's their first DevCon is coming up actually on the 11th of September. You're speaking there, Haseeb.
I am.
I'm assuming you're speaking there because you're invested in the ecosystem. What do you think of the NEAR ecosystem?
I think NEAR is awesome. So the way that I analogize it, so I like using the city metaphor about thinking of each blockchain as a different city. The way I analogize Solana is kind of like LA. It's like fast and furious. It's like very kind of laissez-faire. It's like, we just want to have everything be really cheap and beautiful weather all the time. That's the goal. Sometimes mismanage things. Sometimes we're a little too aggro, but it's cool. NEAR, I think, is San Francisco. NEAR is the city of idealists and technologists. That too. That's a part of it. That's a part of it.
Everywhere. Just needles everywhere.
Yeah, look, you take the whole package. But the thing I will say about NEAR is that Ethereum 2.0, we're getting so excited about Ethereum 2.0, right? But of course, the thing that we're getting excited about is actually not what the original thing that ETH 2.0 said it was going to be was. ETH 2.0 originally was supposed to be a bunch of shards. Remember this? A bunch of shards that communicated to each other, said you could launch your application on any shard, and it was infinitely scalable, right? That was the whole pitch, okay? That's gone. That is gone. It's going to take years before we even get shards, and Vitalik has already said that they will never do any computation. So the shards will just be data shards. They'll just be like a little Arweave on top of Ethereum. So what that means is that this vision is dead for Ethereum. NEAR is the only serious blockchain that is going and saying, you know what? That vision that Ethereum said it was going to do with Ethereum 2.0. We're doing that. We are doing that. We are going to make an infinitely horizontally scalable blockchain ecosystem. That is exciting. Now it's going to take a while for it to be, fully mature and to onboard all the applications to the extent that Ethereum and Solana have. But in the long term, like technology and scalability really freaking matter.
Avichal,
huge fan of NEAR. We were seed investors in 2018, so we think extremely highly of Ilya and Alex and Eric and Marik and like the whole ecosystem there. I was going to add a couple of points, and unfortunately, I have to agree with Haseeb on this. But Haseeb, did you do NEAR at Metastable back in 2018, or had you?
Yeah, we did the seed round as well alongside.
Yeah. So the seed round was unfortunately, because we have to agree now, was Metastable and Electric when Haseeb was at Metastable back in 2018 with Naval. And I mean, I think people are underappreciating how good the NEAR guys are. I think they're one of the few teams where when you go talk to people in the ecosystem, it has that like sort of special Ethereum like magic. Like the people are like they're genuinely to build. It's like engineers and builders, and I think people who haven't done research on this, I mean, they don't understand how good this team is. Like technically speaking, it's an excellent technical team. Like Ilya is one of the authors on the TensorFlow paper, right? This is like a fundamental paper in machine learning. Like these guys are brilliant. And I think a lot of what the ETH community has wanted to build, the NEAR guys are actually executing on, like faster EVM, better dev tools, sharding, like, they're actually building on this in part because they can, because the ecosystem is so much smaller. Like the ETH community has this really, I mean, it's one of the most complicated things, ever to move an entire ecosystem along. So it's not to denigrate them in any way. It's like, that's a really hard thing the ETH community is pulling off. And the NEAR community, by virtue of being so much smaller, is just so much more nimble. And so they're actually able to go execute on a lot of these things. And coming from a Web 2 perspective, we have a strong bias. The reason we did it is like sharding is the only way to scale in our opinion, ultimately. Like that's really going to like produce the kind of scalability that we need over the next 10 to 20 years to make this like internet scale. Like you have to get progress on the sharding solution in addition to all the other stuff. You got to get L2s, you got to get ZK rollups. You have to have all that other stuff too. And I think right now these are the NEAR team is the only credible people sort of running in that direction and making progress on it. And if they actually crack that, that's tremendous. That's a massive unlock for the space.
Ran, what do you think?
Yeah, I mean, look, I think they're part of the basket that you buy, 70 IQ, right? Like going back to that. I don't have a vested interest one way or the other. That's not a knock on these guys' theses. I think you put your money where your mouth is, and obviously agree that the team is technically brilliant. But it's just a question of like how much headspace do people have for new protocols and like new ecosystems versus like the ecosystems that already have this gravity well. And like a nice flywheel with other developer tools and things that are possible. So I'm not sure where NEAR fits into that, but I also think it's just too early to call the game. The interesting thing about what Haseeb said in terms of like going back to sharding, I do think that's a hard problem. It's interesting. And I do think that strategically, it's a really smart move for NEAR as a community and as a development team, especially because they are highly capable. As much as I like them though, I don't want to give them too much credit for that because, when you're behind, you have to differentiate, and that is a differentiator, right? So biting that off, if they're successful, I think it catapults them, kind of up the rankings in terms of mind share because they have solved horizontal scalability. I don't want to go so far as to say that it's a Hail Mary because I think that's unfair, but it's something with really, really high, it's a high beta play. When they are, further down the rankings right now, quite frankly. So,
a couple thoughts on this, right? I think they're doing a lot of other stuff too, right? Mm-hmm. Better EVM, like TypeScript and WASM compatibility, better dev tools. The consensus layer is much faster with proof of stake. Like they've actually launched, in some sense, they built a lot of what you would want the ETH community to build. They're shipping it, 12 to 24 months faster. Like, they have Aurora as an L2, which runs contracts on NEAR, but is ETH compatible. Like they built a lot of the stuff that you would want in addition to pushing the boundaries on sharding. To your point, Ryan, I think one thing I agree with is I think people only have so much headspace, but like if you go back to something that is, I would argue maybe like pure network effect business, which is like a social network. If you look at the social networking market, I think what you saw was two really interesting things, which is I think a parallel for how L1s will play out. One is you saw sort of a massive explosion in the early days of social networks. If you go back to like 04, 05, right? There was MySpace, Facebook, Hi5, Bebo, 6 Degrees, like, and probably 100 we've forgotten about, not to mention 100 regional players. And they all sort of like collapsed and went away by maybe 08 or 09, when a couple of the big guys emerged. But as the market got bigger, you got a refragmentation, right? You got Snap and Pinterest and TikTok eventually, and so the size of the market as it grew, like you got actually a whole new wave. That's one observation. Second observation, even in the era of Facebook being the dominant social network, circa, let's say 2010, so it's sort of like that 5-year window where everything kind of collapsed around a small number of players between 05 and 10. You still had really successful regional players. So like Southeast Asia had, Kakao Talk and kind of that whole ecosystem. And so I think you're right that there's only so much headspace, but I would assert that like the regional network effects are a real thing. And so, for example, you might have the founders are Ukrainian. And so like you might have a really, really vibrant ecosystem kind of in sort of like Eastern Europe. And, Eric and Ilya spent a bunch of time in China. And so you might end up with like between Eastern Europe and Southeast Asia, these people just love NEAR. And so in the West, we may not even pay that much attention to it, but you may get these like really robust places that also happen to, if you just look at where transaction volumes are and smart contract volumes and stuff, those are markets that way over index on adoption of these things too, because their existing financial systems and so on are just so broken that those people understand this stuff. And so all of a sudden you can have something like NEAR be really, really successful in those markets. And in Europe and the United States, like nobody's heard of it. I think that's an entirely possible outcome for those guys too.
Okay. Why is no one talking about Cardano? I mean, we've had you guys on like multiple times, and you got Cardano. Cardano sits at number 8. The comments are here asking, what about Cardano? What about Cardano? What about Cardano? So let's get the elephant out of the room. Let's talk about Cardano. Whatever you guys say, I just want to be clear. This is not my opinion, because every time we bring up Cardano on the show, they cut it up and then they post it, and then Charles goes and jumps into how bad the show is and whatever else. I'm saying not my opinion. This is the opinion of the
Ren,
guest.
What is your opinion, though? What is your opinion? If you want to get us talking about Cardano, I feel like you have to go first.
Okay, so I'll give you my opinion on Cardano. I think that we've seen the pros and cons of taking the fast approach. So we've seen that Ethereum took a very fast approach and is not changing an engine in mid-flight. So we've seen that. We've seen the Solana approach, which is launch on testnet, and then hope that we'll see what happens. And we've seen the problems with that. And I think that Charles has got a third approach. And Charles' approach is do everything slowly and academically and never fail and whatever else. So, and I also think that we're very, very early in the race. So I think we are very early in the race. The part that concerns me about Cardano, though, is that I don't see a lot of venture capital money in Cardano, and I don't see a lot of developer activity in Cardano. We see a lot of projects in our fund. And I don't see a lot of the projects being built on Cardano. And the ones that I am seeing are not I don't want to say it in the wrong way, but I don't see the big brains building on Cardano. And that worries me. But we're very openly holders of Cardano. And why? Because I'm taking a bet on the long approach. So I took a bet on Ethereum. I took a bet on Solana. I've taken a bet on NEAR. And I've taken some chips and put them on the long approach. So, that's kind of where I am. So I'm cautiously optimistic. I guess that's the way I'd word it. Now that I've segued, I want to hear your view.
I'll go first here, because I think Cardano is in that other bucket, right? So there's like Ethereum, and then there's everything else, right? So that you notice that's my framing for a number of these questions. But what Cardano currently struggles with is it's not live in the sense that the other L1s are, right? It's the go slow approach hasn't garnered as much attention. And I think there's a bigger issue. You called it the big brain issue. I think that they just struggle with a lack of memes, right? And when you have really talented people and the big brains behind a project, sometimes that can get into pump and dump territory, or you can kind of have like mixed incentives. But generally speaking, people are looking for leadership, and they're looking for like smart people to go first and take a chance. And the problem is there just hasn't been a whole lot of that in Cardano. So you have someone like me, like I'm a very good processor of information, and I can make a lot of interesting lateral connections, right? That's one of the reasons the annual report does so well. It's one of the reasons that I get invited to talk to smart people. It's not because I'm one of the smartest people in the room. And so I don't really have a strong opinion on Cardano because I just haven't seen the heat map move there, right? As like a synthesizer, processor of information, a processor of memes. It's pretty cold on the heat map of where people are interested and excited. And I think whether that's fair or not, it doesn't really matter because memes move the world, right? We're very tribal, and tribes ultimately are the ones that are going to be building applications or building infrastructure to support these different ecosystems. So it's a little bit recursive, but I think it's an important point worth calling out. It's not so much like, oh, the press doesn't understand us, or, oh, like the investors are conflicted, or, oh, like we're taking a long view and everybody else is cutting corners. I think there's like a much more like subliminal like message here and a much more like root cause to the delta between where you see the market cap and where you see like the enthusiasm from the community. And it's just people don't know how to fit that into like a narrative box. And they don't know how to get excited about it because like there hasn't been a first domino to fall, if that makes sense.
Will Cardano be in the top 10 coins in 3 years from now? Yes or no? Just a yes or no, Ryan.
I'm not going to give you a yes or no. I never do yes or no. But okay. The issue, it depends on whether there's a domino, right? Like if there is some 0 to 1 moment that changes that mimetic framing that I just mentioned, yes, it will be.
All right, listen.
Not, yes, it probably still will be because people will always look at it in a perpetual state of development and optimism.
Okay, look, guys, if you think, to the viewers, if you think Cardano is going to be in the top 10 in 2 years' time, let us know in the comments. Say, yes, Cardano top 10 2 years' time. Let's see if Cardano is going to be there. Now, I've got to hand it over to you guys.
You said yes, by the way. I don't get credit for that?
You said yes. Okay, yeah, you said yes. Okay, amazing. Ryan gave a straight answer, everyone.
But for 2 totally different reasons, right?
Yeah.
Either it's perpetually in a state of development and optimism, or yes, there's actually some narrative that's behind it.
Okay, Avichal, over to you.
I don't know, man. I don't understand it. I just haven't spent enough time with it, and so I don't even understand. I don't understand it. That's my answer. I'm not qualified to give an answer on this one.
Okay, the guy has been in crypto since before most people I know. He has 142 IQ. He's confirmed that, and he says he doesn't understand Cardano.
I don't understand it. Yeah. Well, I'm taking this the midwit on this one. Is just like I just want to use stuff. I just want to like have a wallet and like connect it and like do something with it. And I can't do that with Cardano, and so I don't understand it.
I mean, I knew he'd avoid the question, but like this,
he just wants to play around with his hood rat friends. That's all he cares
That's
about.
Right. Yeah. I'm simple. I just want to connect a wallet and like do something, and I can't do that with Cardano. So I don't even know what to make of it.
Yeah.
Like memes and like geographies and like who's buying this thing and the slow approach, and this is all like big brain stuff. Like the small brain apprach is I can't do anything. So
he started off the show as the biggest brain here, and he ended the smallest brain on the show. I don't know what
you got to go to either side. It's the only way to make money, right?
Haseeb, I'm going to hand it over to you very quickly because we are running out of time.
Yeah, Cardano. Well, you picked a great one to end the show with. I'd say
I'm still going to do Kadena. Just hold on a second.
Oh, okay, great. I was worried. So my take on Cardano is that like I'm to some degree I'm like kind of with Avichal. Is that like honestly I'll tell you as an investor, and I'll tell you this is true for all the big smart money investors in crypto. They don't think about Cardano. They don't spend time on it. They don't like investigate it. And so the question, if you're a retail investor and you're like, why are all these like super rich and powerful and extremely attractive people saying that they don't think about Cardano? You have to ask yourself, like, what is like going on in their world that's not going on in my world? And I think the answer is kind of a few things. So one, as an investor, I understand, and every investor in crypto understands that crypto is a combination of technology and religion, but you have to have both. You can't just have one or the other. Right?
Cardano has religion.
Cardano has religion. Cardano has religion. The problem is that if you just have religion without technology, then you end up becoming more of a religious community than a technological community. And technologists, entrepreneurs, they're very turned off by that. They're like, look, I don't know what's going on with Cardano, but like, why is there so much more belief than there is tech? That ratio is off. And now again, like, I don't have a whole lot of insight because I don't spend a lot of time on Cardano, right? I get very few pitches on Cardano. I don't get a lot of, when people are evaluating chains to move to, nobody is saying, oh, maybe I should go move to Cardano. So that being said, I have no doubt that Cardano will eventually be able to ship something that is fully fledged and does all the things that they said that they originally wanted to do. But, a lot of what turns off people, it kind of reminds me a bit of Litecoin in a way, where, Litecoin, the question for smart people is generally like, what is this thing doing here? Why is it on the top 10 of cryptocurrencies when it was for a very long time? And like, people seem to be talking about it a little bit too much relative to what it does and the role it seems to play in the overall ecosystem.
Yeah, look, every time I think that the bear market's really finished, then I go and I scroll through the coins and I realize that XRP is still at number 6. And then I realized that there's still a long way down to go. So, you don't have to say. I wasn't actually going to speak about Kadena, and we are actually out of time. But when I said Kadena, Avichal, your eyes lit up and said, oh. So tell us a little bit about your thoughts on Kadena.
Well, it was more, I think the stewards are great guys. They're well-intentioned. They've like built some interesting tech. I think Kadena, Mina, Oasis, there's like this like tale of really, really good technologists that have built amazing technology. To Steve's point, like it's like you need the technology and you need the religion. You have to have both. And if you're going to have one or the other, I think starting with real tech is a great place to start, because then you have a shot of bootstrapping a new religion. And I think if you sort of think about that social networking thing I was talking about before, if you think that there are going to be 2 billion people ultimately that end up using these technologies, I don't think it's so crazy to imagine in that world that there is this long tail of chains that solve really specific problems that have, tens of millions or 100 million people doing interesting stuff. And so what's interesting about some of these longer tail chains is I mean, just from like a venture perspective or from like an early stage investor perspective, it's really interesting to go poke around with them, because some of them have really differentiated worldviews. Like they're taking very, very, very different approaches to solving some of these problems.
Are you saying that it is good tech? Are you a fan of the Kadena tech?
I haven't spent any time on that since maybe 2018. So I can't comment either way on like where they are and how much progress they've made. It's just more of the meta observation that there are, like, while I agree with Ryan that ultimately there's probably 2 or 3 big winners, and like people can only keep 3 or 4 or 5 in their head, I think it's entirely possible that you get this really long tail of platforms that emerge here that solve really, really different problems in really, really different ways. Like, Ryan was mentioning privacy by default. There are a lot of different ways to do privacy by default, or, secure computation, private smart contracts, solving specific problems for like enterprise kinds of applications that need public chains but don't want to have on-prem. There's like the universe of like, I think the number of L1s that we'll have that actually solve real problems is actually probably much larger than the number of L1s that any one person can keep in their head. And so that's what's interesting to me about that, is just like that, the people on the fringes who are thinking about these problems really, really fundamentally differently is I think that's like interesting fodder for where the world is going to go. That's why I like it. It wasn't so much an investment thing. I haven't looked at it, but it's like interesting that they think about things differently.
We're fully out of time. Haseeb, I know you've never managed to answer a question in 60 seconds in your life, but you got to try once. Kadena, yes or no?
Kadena, I don't know enough. I mean, I'd say generally the question of like, because Kadena's proof of work, right?
Yeah, it's a proof of work. It's scalable proof of work. That's what they call it.
Scalable proof of work. Yeah. I'd say generally speaking, look, not knowing much about Kadena, and I don't like to speculate on things I just don't spend enough time on, but I would say I'm generally short proof of work. So I think if Kadena is indeed proof of work smart contracts, I think it's probably just like the wrong.
Wait, Haseeb, are you short proof of work from like a proof of space time perspective too, like hard drive space, or just CPU based proof of work or GPU based proof of work?
I think proof of space time is more interesting, but I think it still seems to me like proof of stake is probably net better than proof of space time.
Oh, interesting.
Amazing.
I think proof of space time might actually be a real thing. I think that's actually like a vibe.
I think it will be. It could be a real thing, but I do think proof of proof of stake
Sorry, Ron.
does seem to be better.
Guys always start the show when the show's finished. Every
Yeah, we're
time.
gonna say, next time we're
Man,
gonna send you. We'll send you topics that we disagree. Yeah, we'll send you topics we disagree on next time. Maybe proof of space time is one of them. Or proof
Next
of
time,
work.
I'm gonna have only the two of you, and I'm gonna start the show an hour early, but I'm not gonna broadcast it. And I'm gonna broadcast. Ryan, I'm coming to you. I'm coming.
No
to
last word. Already
I'm coming.
getting voted off the island. Like,
What am I, chopped liver?
you. Yeah, I'm here. I'm here. Here
I'm
we are, Ryan.
representing the idiots, man.
Ryan, over to you.
I
Last
talk
word.
to the people. I'm a man of the people. No, I have a very important last question. We gonna see you all in New York at mainnet? You know I was gonna get a show in here. Crypto.
I'm coming.
Oh, you should
I'm
absolutely.
I'm coming.
You heard
Listen,
it from 3 of the biggest brains in the industry.
That's right.
Well, 2.5, Ran. Sorry.
I thought you were talking about the three of you, but I'll take a half, guys. I'll take a half. Listen, it's been amazing fun again. You guys are amazing. Thank you. Much love from the Banter fam. Much love from me. Thank you, guys.
See you, everybody.
And to the Banter fam, don't go anywhere yet. I've got a whole lot of stuff I want to talk to you about. First of all, remember, let's thank our sponsors, NordVPN. If you do want to get yourself a VPN, this is the VPN for people in crypto. They protect your crypto assets. Best VPN for crypto. It's the one that we use. $3 a month, you can protect your crypto. You'll mask your IP address. You'll hide yourself from hackers. You'll hide yourself from exchanges. You'll hide yourself from anyone who doesn't need to know your IP address, and make your crypto portfolio safer. If you're going to survive, and if you have already survived this whole bear market, what you don't want to be doing is you don't want to be losing your crypto to a hack or something stupid like that. Also, very important, our BYBIT trading competition. So it's starting to gain some real momentum. We're getting awfully close to 1,000 participants, 886 participants. Remember, all you need to do is go to the referral link. There is a link below. You have to either open a BYBIT account with a Crypto Banter referral link, put $250 into your account, or just click on that link below and it'll get you straight into the competition. Now, I'm going to be sponsoring 50 traders. Okay, so open account, sign up. I may just send $250 for your account and sponsoring your trading, and you get to keep the profit. So all you need to do, again, go to this video. Let me make it so simple for you. I want to show you all the steps that you need to take. So the first thing you need to do is you need to open a BYBIT account with a Crypto Banter referral link. Once you've done that, all the steps. So first, open an account with the Crypto Banter referral link. Once you've done that, you go to the BYBIT trading competition. You click here, and you sign up, register. So I'm registered, so it's done. And invite your friends. Once you've done that, next week, the whole week from Korea, when I'm coming to you live from Korea next week, by the way, I'm going to be sponsoring people to trade. So you're going to be trading with my money. I mean, that means upside goes to you. And if you lose, well, tough luck for me. And if you make money, well, great for you. So do it. I promise you it's going to be the most fun. Don't wait until it's too late. The registrations close on the 8th. So when did we say on the 8th? Yeah. All right. So guys, do it. Is that it? If I said everything is to say, I don't need to play the video if I said it. What I need you guys to do is, look, the show is very fast today. So what I need you guys to do, tell me what you think about Kadena in the comments below. Tell me what you think about Cardano in the comments below. Tell me what you think about NEAR in the comments below. Tell me what you think about Solana in the comments below. On Monday, I will be reading out those comments on the show. So I want to get a gauge of what you feel. I said what I feel. We heard what the guest said. I want to get a gauge of what you feel. I must say, I had a lot of fun today. Another high alpha show. I'm having a lot of fun doing what I'm doing. Really, I'm in my element, and you can see it. I'll see you guys again next week from Korea, where I'm going to bring you live broadcasts of Korea Blockchain Week. I can't wait, and I can't wait to meet the members of the Banter fam that got tickets. See you all there. Have a great weekend. Tomorrow I'm on a flight. See you then. Trade well, my friends. Carl, when I say trade well, my friends, that's when you hit the video. You didn't put your advert for your NordVPN. I don't need to do an advert for Nord. Everyone knows NordVPN is the best VPN for crypto people. I said it twice on the show. I love them. I use the VPN. What more do you want from me? We want the video. All right, you want the video? I'll play you the video.